Check out Taiwan Semi shares up 4%. Session highs after raising their 2025 revenue forecast. The signal big tech is still pouring money into chips and data centers. Deirdre Bosa breaks down why. And Deirdre, yesterday, okay, riddle me this. ASML makes the tools that make advanced semiconductors that TSMC fabricates, or what do you call it? They have problems. The stocks are down. Maybe it's tariffs, maybe it's not. Then today, TSMC, everything is fine. How can both of these things be true at the same time?
Right. This is what I said yesterday, right? There's conflicting signals. So we wanted to go a layer deeper today and look at some of the other signals, valuations. I'm going to tell you exactly why we sort of arrive at this. So when you combine TSMC's outlook this week from other ones, forget ASML for a moment. Let's look at NVIDIA, Meta, Google in the public markets, Anthropic, other startups in the private markets. It all suggests that a new AI baseline exists, not a bubble. Even if the numbers look stretched at first glance, even if you have the ASMLs giving you different signals. Underneath the headlines, there's real revenue traction. NVIDIA is still adding earnings power with China back in play. Meta, Google, Microsoft and Google are seeing explosive token growth, and that is a clear sign of surging demand. And Meta, not to mention, spending hundreds of billions on capacity. On the private side, you've got darlings like Anthropic that are reportedly flirting with a $100 billion valuation, also seeing surging revenue, and that's helping to justify the run in the private market. Kelly, I also want to show you this chart from Bespoke. I've had it in my back pocket for weeks now. It tracks the Nasdaq's performance the first 645 days after Netscape's IPO in 1994, and then compares it to the post-ChatGPT run. Now, the takeaway is that this rally is actually behind where the dot-com boom was at the same point, even though the fundamentals today are stronger. Driven by infrastructure spend and models. At its peak during the dot-com bubble as well, poster-child Cisco had a PE valuation of about 200. NVIDIA's current one is around 56. Then you look at the S&P's valuation, it's also well below dot-com bubble levels. But of course, Kelly, that does not mean that there aren't risks. We did talk about ASML yesterday. What are they seeing that we might not? This trade also depends on massive sustained spend. That's not guaranteed. Investors could get impatient for ROI. We've seen that before. Tariffs could escalate. China could release another DeepSeek moment. So even if AI is not in a bubble, it is exposed and it's built on assumptions that could shift fast. But when you look at the past week, the past few weeks, and those valuations, there's room to run.
I did not like Torsten Slok's chart the other day. You probably saw it, where he said, comparing the AI, what he called bubble, to the dot-com bubble. This one implicates the S&P 500 and the biggest companies in it. You know, so you want to think, well, it better not be a bubble. Whatever it is, just better not be a bubble.
Right. And I think that when you look at purely the valuations, you look at some of the biggest companies in this space, like in NVIDIA, that just has so many demand levers right now, you can come to the conclusion that there could be more, especially when you look at it from that point of view. But also, Kelly, you know, I track the private markets very closely. That's always been very frothy. But even now, the age of AI, ARR revenue, it's growing so much faster than we've ever seen.
All right. That's better news for now. Thanks. Deirdre, we appreciate it. Deirdre Bosa for Tech Check.